Good afternoon, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing great. You can find me on Solstice. Twitter was my handle. On Instagram. You can DM me on Discord, which is my ID right here. We use adaptive algorithm for trading. Remember, we're not a broker-dealer. Past performance doesn't indicate future results. Use at your own risk. And today we're going to talk about what can the Feds do in relationship to the tapering if it's going to happen by November, December of this year and goes on till next year, 2022 or mid-June. Let's first of all, break it down in two different ways. Can the Fed's tapering bring a change in the stock market? And can there be a shift in the overall stocks where we have to go to the defensive ones instead of using such as the technology companies and large cap growth? So we have to pay attention that this quarter we had a dip in the market in the overall S&P, Nasdaq, the Russell, and the Dow to almost to July low, and we reversed and continued higher and eventually broke out to a new high. Do we have to do an asset allocation shift in the overall market? It's like using a chess game in order to make a change in our thinking from shifting from one to the other and do asset protection. So last week's video, this was the slide I put in, and I made sure, are we going to continue? Is there going to be concern regarding inflation, geopolitical, and the global market depths and the taper? And I said, keep an eye on consumer products, staples, structure, energy, and all that companies. Are we going to make a new high by end of the year or not? So let's see what this week's Fed policy brings in relationship to our market without being biased to being either bearish or bullish. And we trade what the charts offer us, not what we think. And if you like this video, before we get started, I'd like you to hit the thumbs up, follow us on YouTube, and ask for any questions. Since, October is 31 days, I cannot anchor my fibs till Sunday night, but I'm going to use couple today to show you how I anchor my monthly fib in relationship to the weekly, so we can see an overall view where our 61 is, our 38, 50% in relationship to the fib extensions to the upside, as well as to the downside. That way you can learn something how to anchor your fibs using channels and fibs for breakout and breakdown and the candles in the direction of the moves, which are called measured moves. We can see that in October, that was our low. This is the monthly October high, but we still got one more day, Sunday, till it closes. So we can either anchor it today or we can anchor it on Sunday night, all our fibs. So what I'm going to do, you can grab the low here to this high here, and this will anchor the fib for you from high to low for the month in relationship to where the 50, 38, 61, since we started at the low and we continued higher, I anchor my fib from low to high. If the market went from high to low, I anchor my fib from top to low to know where my extensions is. I'm going to remove this first, and I'm going to use the monkey bars in relationship, remove the drawing, so we can see how they look like. We go to style, where it says chart mode standard, we go to monkey bars. It'll give me in relationship where most of my contracts were bought and sold in relationship to the time spent, which was lower, and compared to where most of the contracts were. This is my value area low, that shadow, my value area high, that time spent, and value area low. So I'm going to grab the Fibonacci where it is around 54,351 and a quarter, 51. It's not going to be accurate right here because I have to anchor them, and my high is right here, which is 58,517. we can see him actually up here. Oops. You can see him actually up the top where the price is. It shows you where the open is for the month, where the low was for the month, where the high is in relationship to the close here. So what we're going to do, we're going to right click here, edit the property. So we know it was 51.3, the low, and the high was 517 exactly. So for the monthly, instead of having all these colors for the Fibonacci, I go set. We make him usually purple for the month, and we push OK. So we know our monthly is here, but the time spent in relationship to the fib, the 50, is lower. So my expected move is going to be shifting lower, the extensions to the upside. So I grab my 50% right here, where it is at 34.2. We grab the midpoint of the time spent in relationship, and we push it lower to the 100% line, which is 51.3. We know our anchoring is a little bit off, so we can go right in here, edit the property. We make this 34.2. That's, I'm sorry, 56,430. 4.2. It's going to sound a little bit hideous at the beginning, but give us a little bit of time to make sure we anchor everything correctly so we won't run into any problem on that setup. And we have 51.3. So now I have my bottom, my 200% is down here. So I activate the fib. We push the Fibonacci down to where the 200 is, and we move our zero line where my 50 started, which was 51 point. Let's see where it is, 53.9, I believe. Let's take a look here. Edit the property. We're just going to make sure what it was. It was 34.2, looks like. So activate this fib or edit the property. And 34.2. Now we have the Fibonacci that is correct for the month fib extension. We know that the 61 is here. We do have a 78 up here, and we have a 200% up the top going high. So we remove this Fibonacci, which is the measured move. I go right in here. We go into style. We go back to standard mode, and this is our fibs for the coming month. That will be for the November expected move in the profile on the combination of those four instruments. Now let's go a little bit faster, taking a look at the Dow Jones Industrial Average in relationship where the market is. It has created a monthly and a weekly high for the week, and we can see where the retracements are between the high and low in a relationship to where it was the prior high here in August that was made. So the Dow made a new high. Take a look at now the RTY. We can see that the small cap in relationship since January of this year and February, we've been range bound between the 2350 and the 2100 area. Can the small cap have a Christmas rally or not? We have to keep an eye what the technicals can offer us. Has not made the monthly high and low. You can see it from here, from the low in October till end of October. We have not made the prior high right here. So let's take a look at now the Nasdaq NQ. And the Nasdaq made an annual high this month. We can see it broke out of this channel and looking to go higher. We have an up channel here. Does it continue higher or not? We have to see if the market can offers us that in the technology sector, such as Amazon, Apple, Microsoft, Tesla. Some of them have reported, correct? Facebook, Google. So we have to pay attention to what the tech sector is doing, the biotech sector, the Nasdaq 100 in relationship to the majority of the S&P 500, in relationship to the New York Composite, which is majority of those 2,000 plus shares out there that are traded there. So we can pay attention to what the technicals offer us. You can see where the low is in relationship to the high. That was our last week's video. We were concerned about it 2 weeks ago when I did that video, and I said we have to keep an eye what the global markets were doing in relationship to the S&P. So I'm going to do this a little bit, going to a 4-hour to show you how we anchor the 5-day range for the week. We know that the Wednesday was down here, the low. Monday, Tuesday high was here. By Friday, we made a new high. So what we do, we grab the Fibonacci and we anchor the low and high. This is our low. This is our high. And we go right click. We edit the property. We have to take it back a couple more days back because in relationship, that was the Sunday high and low for the week. And instead of having it color, the weekly is usually done with a flat color for the week. So we know where our fibs are for the week in relationship to where the market is from Sunday through. Oops, this was our Sunday low. Oops, I made a total error right here. Remove drawing. This is our Sunday, my fault. So we grab it from here to this high here. And this is our weekly fibs. Edit the property. We come in here. We change the color. And we make it gray for the week. And we go back to the daily chart time frame. Time frame here. We go time, daily. We're going to go 6 month out. And it's going to stay on daily. So you can see how the weekly fib in relationship where the 61 is in relationship to the 0 line, the 50%, and the 161 to the bottom. So we trade what the market offers us, not what we think. So let's now go to BTC /BTC. Bitcoin has last week made an annual high, and I told everybody, watch out at that high, we may get a small retracement back down. It's creating a box inside of a linear regression channel. These are 2 channels in an uptrend. It finally found a little bit of support here, double bottom, and U-turn have not cleared the 50%. If you take this high to this low, has not made a 50%, but if you take this low to here, it cleared the 50, trying to push higher. But we have to pay attention what the technicals offer us in Bitcoin. If we take a look at Ethereum, ETH, we can see that ETH has made a weekly high and a monthly high on a small little gap down here in the overnight action. This is why I usually put those gaps there to see where they are in relationship to where the market. Whenever they are filled, I usually remove those gaps, the shadow off. Like this one's still on. This is received. This one's still on. This is still on. There's this one still here. If I go to the 4-hour again, it will show it to you. I'll do it one more time. Or on the hourly, the gray area is in the overnight, and the non-gray area is not in the overnight. You can see that the trading hours is here. We gapped up. We retested part of it. But this is the original high, and this is the overnight action between the Eurozone, Australia, China, and Middle East in relationship to the trading hours that trade the futures in our economy from the 9:30 till usually it starts a little early and they finish up around lunchtime. But we can see that the overnight action is right here, and I usually highlight them because you can see that's the low. This was in the overnight, the gray area. We gapped down. We pulled back up, but this area here is not 100% filled due to the fact of this gap here that's sitting in the market. This is in the overnight. This is why it is highlighted. Let's now go to GC in gold. GC has been range bound. Every time it looks up at the 1800, 1805, 1810, it gets to retrace. Every time it goes back to the 1770, 1760 area, it gets brought back up. So let's take a look at it on a daily chart so we can see where it is on the charts on that 6 months chart. We know we are in a symmetrical triangle. You can see we have a range here. We are in an uptrend, has not lost this uptrend. That 15, 17, 60 area is very important to us. If we find support here, if it comes back in this area, I would like to purchase gold, take a risk on it to going back up. And if we end up breaking this week's range up here in the 1810, 1815 area, I'll look for the backside of this channel eventually breaking out the 1845 area in GC. Let's take a look at CL. CL had the crude have been, since August climbing higher from the $60, $61, $63 range, and have grinded all the way up on the monthly to the $85 a barrel. We closed at 83. We almost double bottomed that 18 simple moving average. Every time it has touched it, when we fell here, it has reversed back up to the top, but has not been able to fall through that linear regression channel. This is a very important area, that 80-50 in crude oil, if we end up losing it. And if we clear this area where we broke out of, this is the midpoint of those two channels, we look for the upside of the channel in crude oil in case things go higher, and pay attention to inflation. So let's now go to taking a look at a couple of ETFs and a couple of stocks so we can evaluate everything that has happened in the market. We'll take a look at AAPL. This was the report on the earning. It fell down. It got brought up a little bit back up in relationship to the prior earning report. It came a little bit short. It is holding the 18 and the 50 simple moving average on the daily. It closed right on it. If it ends up falling, because this is considered a channel that it broke out of, it looked up and fell back in. If it cannot clear this channel, Apple would go back through the 18, through the 116 simple moving average in this channel where it consolidated, where it broke. Between here and here, there's a small gap. You can get a channel, you can get a box here, and you can actually highlight it on the daily. You can see that there is a gap here. You right click, edit the property, and just move it a couple of days, and you can see where the gap is in relationship. There's a gap here, and there's a gap here that has never been tested in Apple. Can it be refilled? Those are called islands. On the way up, they are similar. When they gap down, they fill, they're no longer valid, but I marked these two so we pay attention to where Apple is. Let's take a look at Amazon. We can see Amazon has a similar situation. They brought it back up a little bit after the earning report, but we have to pay attention if it's going to hold or lose that area and fall back down to these three levels that it was around the 31.75 area in Amazon. If it clears the 33.75, then totally different compared to where it is in that gap right here. Out of breaking out of this channel, it looked up, now it fell back down after earning. Let's take a look at Facebook. Similar situation, it's in a wedge trying to make a decision. Remember, Facebook may be doing a name change, maybe doing a lot more stuff interactive online, and it's going to be called Meta. Does this change the company outlook? Maybe, maybe not, but pay attention to what it's offering you. Let's take a look at Google. We can see Google has gapped up, continued higher, still holding on the weekly chart. It created an annual and a weekly chart and a monthly high for the month Google. If we take a look at Microsoft, it did very well. The report came out clean. It's got a professional gap right here. This is the gap that we have to pay attention to. We do not want to lose, and we can extend it, edit the property. We can extend it 2 days out so we can see where it is in relationship to where the gap was in Microsoft. Let's take a look at Nflx. Similar situation. Netflix continued higher, made an annual high for the year, and it is continuing. We can compare it to Disneyland and, Prime, Roku, and other stuff. We can take a look at Roku. I don't bring it up all the time. There's Roku down the bottom. After it should be reporting next week. Let's take a look at Tesla. Tesla created a nice gap after the earning report, continued higher and made an annual high fib extension where it went from the 23 annual high to the 38, eventually cleared the 50 and the 61. This is a very important area. If it looks above the 61 on the annual chart and ends up to be failing, you look for the 50, 38, and eventually filling the gap. So pay attention to what Tesla is. Tesla is not the company itself. I like the technology in it. The car, I'm not biased, but I just don't like the vehicle, okay? So let's take a look at shop. Oops. And I'll start doing some ETFs. You can see where Sharp is. The earning brought it back up. We can take a look at XOM. ExxonMobil's at a high due to oil. You can see it in Devon Energy, Chevron, SVX reported. You can see it created an annual high for the year. Let's take a look at the BA. Boeing has been struggling a lot after the earning report fell down. Does that mean there's a slowdown in the airline companies? We'll look at some ETFs. LMT, Lockheed Martin, fell down as well. That's a large gap drop down in the defense sector. This was the last month fib, so I have to eliminate it. No longer valid. We got to remove it. The monthly fib should be where? Activate the fib. That's the text, correct? We move it to here, and that's our monthly fib for. We edit the property. We create it on the right side instead of the left, and our weekly should be from here all the way down here, the Fibonacci. So when we draw the fib, we're going to draw from top to bottom. Since it's fell in the earning, we got that large gap in Lockheed Martin. Let's take a look at some ETFs. I'll start first by taking a look at the bond sector, the TLT. This is the Treasury bond. We can see where it is in relationship to the overall market. That's TLT. We can take a look at the 10-year TNX. We can see where it is in relationship to the overall market, because if the inflation and interest rates are staying low, that means the par value of the bond can increase. We can look at the IEI, which is the short term as well. You can see how it fell. The 10-year IEF, the 3 and 7 year, you can see where they are. This is why I brought all the ETFs. Now we're going to look at the XLY, and that's an ETF fund for the spiders, a consumer discretionary. We can see it created an annual high. We can take a look at the XLB, and you can see that the XLB is the material ETF for the spiders. It's trying to consolidate, trying to break up. Pay attention to it. We can take a look at JNK. I'm just going, JNK. I'll put JNL. JNK. JNK, you can see it's a little bit down. Bloomberg broad market cycle. We have to pay attention to it in relationship to the IEF. A Vanguard VTV. We can look at the Vanguard value play. It created an annual high. Can it continue high? Because we have to start shifting our thinking in relationship to the tech sector, such as QQQ, which is the technology, the spiders SPY, in relationship to the IWM Russell, which is the Russell 2000, has been range bound since January, February of this year. IWN is in a similar situation as well in relationship to the MDY, the mid cap. You can see where it is in relationship to one more, which is the NYA, the broad market overall sector in the New York Composite made an annual high, but this week it fell down on Wednesday a little bit because of the different products out there, fell back in and came back up a little bit to close in the mid-range. So the most important thing, we're going to trade what we see, not what we think. And remember, we have to look at these different sectors, but I'm going to go from large cap to conservative one, and I'm going to use the Schwab one before I go back to the ES. SCHG, this is the growth, has made an annual high for the year. We can see that the growth has done very well. We're going to look at SCHX, which is in relationship to the large growth. This is the large cap value play. You can see made an annual high in relationship to SCHA. We have made a range. That's the small cap. It's range bound. And in relationship to the mid cap, SCHM, where we are in mid cap. So we have large cap growth, we have value, then we have the small cap, then we have last the mid cap. We have to pay attention to medium-sized companies, the small cap, and utilities, discretionary products, in case the market does shift or we end up changing the sector due to the Federal Reserve policy in case of tapering. Let's go back to ES, the S&P 500. This is our weekly fib, and we can take a look at the monkey bars in relationship to where they are. Before I do end this video, we can go to monkey bars. We can see that the time spent and the POC is a little bit lower. Let's see if they can shift up, because if I take the low here to this high, my time spent was lower. So our expected move is a little bit lower than the extension to the upside on the monthly fibs for November. So last but not least, let's go back to the ES, take a look at it, and we'll be able to finalize it. Here we are in relationship to the high. This is our low to high. If we get a breakout to the 61.8, or we fall back to the 61.850 here, eventually the 0 and the 161 where the gap is. So I hope you enjoyed it. If you like this video, hit thumbs up, subscribe to the YouTube. It's free. Take care. Over and out.